Assalamualaikum warahmatullahi wabarakatuh. We are from Group 4, going to present about a company that's Gem Researchers Berhad. This is our group members, Umairah, Maliana, Farahin, Adlin and me, Sulaika. Firstly, I want to present about a background of company. Gem Researchers Berhad is a company that runs 4 business divisions such as restaurant, industry, food and polymer. 45 years ago, the company only ran a small business, a textile chemical trader. But now, the company is a Malaysian multinational conglomerate because it has 4 business departments with operations covering the Asian and Japan regions. The company is growing steadily from year to year. This is because the strength of the company is aimed at identifying and leveraging market opportunities to provide our customers and clients with high quality service. The company is fully committed to becoming an international market leader in all core business areas and delivering outstanding shareholder value.
Hi, my name is Nufarahin binti Muhammad Khairi. I want to present about accounting standard and policies in Textile Resources Berhad. Accounting standard used to systemize bookkeeping and other accounting function across firm, and over time set of practice and policies. Textile Resources Berhad only have 2 accounting standard and policies, MFRS 116 and MFRS 138. MFRS 116 property, plant and equipment is used in Textile Resources Berhad in their company. The MFRS is focusing to identifying property, plant and asset to accurately measure and to make sure can give a benefit in the future. Textile Resources Berhad should recognize an asset in the company. Second one is MFRS 138 intangible asset. It is used in Textile Resources Berhad's company. Intangible asset is an identifiable non-monetary asset without physical material. This MFRS 138 should be recognized if probable that can give economic benefit in the future. Intangible asset also are initial measure at cost. All the costs are included, then intangible asset are carried at accumulated amortization and any accumulated impairment losses that applicable. Intangible assets are not allowed revaluate under MFRS 138.
This is the disclosure of non-current asset of the Textile Resources Berhad. According to MFRS 116, a company is generally required to disclose financial statement showing the opening and closing amount of total carrying value of property, plant and equipment, as well as accumulated depreciation and impairment losses for the reporting period. Additionally, it should report impairment losses and their reversals. A cost breakdown for constructing manufactured assets, including expense and legal obligation, should be provided. 1. Category and nature property, plant and equipment (PPE). Land and building includes office and factory building as well as land, machinery and equipment, production and machinery equipment, furniture, fittings and office equipment, office furniture and computers, motor vehicles, cars and trucks for business use, capital work in progress, ongoing construction project not yet completed. Tangible assets used in production, supply of goods or service, rental or administration expected to be utilized over more than one financial period. 2. Recognition criteria. PPE are recognized when the future economic benefits associated with the assets are probable and the cost can be measured reliably. 3. Measurement methodologies. Subsequent measurement. Initially measured at cost, subsequently measured at cost less accumulated depreciation and impairment losses. Certain assets like land, a building may be revalued, ensure their carrying amount reflects fair value. Depreciation. Applied on a straight line basis over assets' useful life. Building 20 to 50 years, machinery and equipment 3 to 10 years, furniture, fittings and office equipment 3 to 10 years, motor vehicles 5 years, begins when the asset is ready for use and ceases when derecognized or classified as held for sale. Impairment. Regularly reviewed for indicators of impairment. If impaired, the carrying amount is reduced to the recoverable amount, higher of fair value less cost to sell and value in use. Impairment losses are recognized in profit or loss. If an asset previously impaired shows sign of recovery, the impairment loss may be reserved.
Hello, I am Umairah, and today I will continue the presentation with my part, which is 4.0 economy, environment and asset valuation. So we move to the first part, which are 4.0.1 critical appraisal of key non-current asset. So there are 6 non-current assets, which are property, plant and equipment, or known as PPE, right of use asset, which known as ROU, investment in associate, intangible asset, deferred tax asset, and other receivable. PPE is an asset of a company that are real, physical, and have a longer lifespan than a year. Measure at cost and need accumulated impairment losses. From the year 2022, it has increased from RM 149,455 to RM 150,252 in 2023 with RM 797. Next, right of use asset. ROU represented the lease, right to use a lease asset over the lease term. Recognize the lease payment associated with these leases as an expenses on a straight line basis over the lease term. From the year 2022, it has increased from RM 147,207 to RM 161,905 in 2023 with RM 14698. Next, investment in associate. Investment in associate are with limited exception required to be accounted for using the equity method. From the year 2022, it has increased from RM 4969 to RM 5225 in 2023 with RM 256. Next, intangible asset. Intangible asset are assets with no physical form and have a long-term asset that accrues value year over year. Intangible asset other than goodwill that are acquired by the group, which comprises a trademark which has indefinite useful life, is measured at cost less any accumulated impairment losses. The amount for intangible asset both year for 2022 and 2023 are the same, which is RM 55882. Next, deferred tax asset. Deferred tax asset is an item on the balance sheet that result from an overpayment or advance payment of taxes, measured based on the expected manner of realization or settlement of the carrying amount of the asset and liabilities using tax rates enacted or substantively enacted at the reporting date. From the year 2022, it has increased from RM 13196 to RM 13627 in 2023 with RM 431. Lastly, other receivable. Other receivable is an accrued income, only consists deposit. From the year 2022, it has decreased from RM 8957 to RM 5977 in 2023 with RM 2980. Next, I will proceed with 4.0.2, which is current economic factors. I have discovered 2 economic factors, which are inflationary pressures and rising interest rates. So, the impact on asset management and valuation for inflationary pressures can result in increased replacement and maintenance costs, as well as a possible rise in brand advertising and patent maintenance fees. So the strategy adjustment that the company can take is that make sure financial statement give an accurate picture of the worth of the asset by using revaluation models that takes into account current market prices. Next, rising interest rates. The impact on asset management and valuation is that had decreased the sale because the amount of demand is lower. So the company may restructure debt or renegotiate lease terms to lessen the impact of changes in interest rates.
Next is analytical and engaging presentation. So this table shows the total non-current asset for the year 2022 and 2023. The total for 2022 is RM 379,666 and the total for 2023 is RM 392,868. Okay, so first is property, plant and equipment. In 2022, Textium Resources Berhad report property, plant and equipment valued at RM 149,455 million, which slightly increased to RM 150,252 million in 2023. Property, plant, and equipment encompass tangible assets such as land, buildings, machinery, and vehicle used in the company's operations. This increase may reflect capital expenditures or acquisitions during the year to enhance operational capabilities. Next is right-of-use assets. Right-of-use assets amounting to RM 147,207 million in 2022 and increasing to RM 161,905 million in 2023 represent assets leased under operating lease. This category is governed by MFRS 16, reflecting the company's leased assets like office space, warehouse, or equipment. The increases suggest either new leases entered into during the year or adjustments in existing lease terms. Next, investments in associates. Textile Resources Berhad holds investment in associates value at RM 4,969 million in 2022, rising slightly to RM 5,225 million in 2023. Investment in associates donate equity investments where the company has significant influence but does not exercise control. This category highlights the company's strategic partnerships and investment in other entities. Intangible assets. Intangible assets, which include items like goodwill, patents, trademarks, and intellectual property, maintain a consistent value of RM 55,882 million from 2022 to 2023. These assets contribute to the company's value through their intellectual or competitive advantage and are crucial for Textile Resources Berhad's long-term growth and market position. Then deferred tax asset. Deferred tax assets reported at RM 13196 million in 2022 and increasing to RM 13627 million in 2023 represent future tax benefits arising from temporary difference between accounting and tax rules. The rise indicates adjustments in tax calculations or expectations of future tax recoveries. Next is other receivables. Other receivables categorized as non-current assets not falling under other specific categories amounted to RM 8,957 million in 2022 and decreased to RM 5,977 million in 2023. These receivables may include long-term loans or advance extended by Textile Resources Berhad to third parties or related entities. Total non-current assets. Summing up all non-current assets categories reveals Textile Resources Berhad total non-current assets, which increased from RM 37966 million in 2022 to RM 392,868 million in 2023. This overall growth reflects the company's strategic investment and asset acquisitions during the year, aimed at enhancing operational capabilities and supporting future growth initiatives. Then, for the ratio analysis, we will calculate for 2 years, which is 2022 and 2023. First is non-current asset ratio. The formula is non-current asset divided by total asset. The calculation have been shown in the table, so a high ratio in 2023 may indicate a more asset-intensive business model than 2022 for the Textile Resources Berhad. Next is return on asset. The formula and the calculation as in the table. Textile Resources Berhad return on asset ratio is better in 2022 than 2023, indicating efficient asset utilization and profitability. Last is total asset turnover ratio. The formula and the calculation are in the table. So, Textile Resources Berhad show better asset utilization in 2022 compared to 2023, where the company faced challenges in maintaining sales relative to its asset base. Improving asset turnover efficiency will be crucial for enhancing revenue generation in the future.